In today's training and educational video, we're going to be covering the articles why JP Morgan expects gold to surge. We've got 170 tons of physical gold, but just delivered here for gold here. We've got bank warns that gold is the only hedge. We've got gold articles, gold. Even silver, stock sinks at silver soars. There's so much positivity around gold and silver. And why this is a warning when it comes to right now in the markets, but there's also good news, and I'm going to get to that as well. Also, the big tech companies are releasing their earnings, and what I actually think about what's actually happening, especially with Facebook. Also, bubble warnings get louder, and we can see also here with this screenshot how we're getting so massively overvalued when it comes to the Nasdaq. And also Ray Dalio talks about why the US-China capital war is hitting the dollar, what we actually can expect from the US dollar. Also a massive short squeeze on cryptos and what's happening right now in the Bitcoin market. We're also going to be looking at the charts and share that with you as well too. And also we're going to be going over this chart here. I got it from Ray Dalio's article recently. And this article here, I'm going to tell you about what's likely to happen moving forward when it comes to the debt, what's happening with the debt right now, and also interest rates, and what's likely to happen over the next, say, 5 to 10 years. And this here right now is a massive guidance and also a massive warning of what's going to happen right now. This here is about complete devastation is likely to hit the markets. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here. Hope you guys are doing well. We have a lot to go through with today's video, but first guys, that very first thing in the description, actually I think it's in the very first comment there, click on that and I'm going to share with you my #1 trading system, or the trading pattern that produces amazing explosive results when it comes to that pattern there. So make sure you click on the very first thing and go get access to that. And also I'm going to be sending you a free trading course as well too, just to get you started. So when you put your name and email address in, you'll get instant access to the free trading, and also over the next 7 days, my system is automatically going to be sending you a free trading course as well too. One video per day. So go to that link in the description below. Now, let's actually have a look at what's going on here. There is so much positivity out there right now when it comes to gold. Here is one article on Zero Hedge. Here's why JP Morgan expects gold to continue to surge. Then we have another article here where a record 170 tons of physical gold were just delivered on the COMEX. And we also have another article here from Zero Hedge. One bank warns why buying gold is the only hedge left with what's going on right now. And also there's an article here from Bloomberg, the message behind gold's rally, the world economy is in trouble. And then there's also another article here from Zero Hedge. There's so many articles here. Stock sink as silver soars to its best week in 40. Guys, right now as I speak, this is a massive warning sign for silver and a massive warning sign for gold. So what I mean by that is we're looking at the gold daily chart, okay? And we have been into a massive move up. And I do expect gold to continue to move up on the very short-term basis, what's happening here right now. But I do expect to see something to happen to gold and to have a bit of a short-term pullback. Now, I say a short-term warning. Overall, I'm a very big long-term bull with gold, but this vertical move right now, and we're just getting to this previous high. If I go back to this level back here, this here is the ultimate high point that I have on my chart. Right there is where I have my ultimate high point, and right now where we are at, this is the weekly chart we're looking at. We're almost at that high point right now. So we're almost at that high point, and we're getting so much positivity. When there's so much positivity, the media is talking about it, how good it is and how amazing it is. I would not be too surprised if I squeeze my chart up. Let's go back to the weekly chart once again. And I would not be too surprised if we did push above all-time new highs, and then we see a pretty sharp, strong move down. But we do have this very big long-term bull trend. So I would not be too surprised to see what's happening right now, and to see a push up and then a bit of a reversal here for a bit. And again, I'm not calling for a crash. I'm calling for just a short-term pullback, because there's so much positivity out there, and then possibly even continue up above 2,000. I'm a very big long-term bull when it comes to gold. Now, moving on to the silver market, Why there's a massive silver warning as well too is that we've just gone through a massive vertical spike. Again, I expect a little bit more upside, but do not be too. Silver's a bit of a wildcat, right? Silver's like a bit of a woman there, right? She just can flick a switch, and she can just be all over it, right? So the whole thing is with silver, I would not be too surprised to see a bit of a short-term pullback, which will actually be good for you guys that are not in silver right now, because I do see weekly charts tell me right now that silver has just broken out and we have just started that bull trend. So a nice short-term pullback, and even for me personally, I'm already long-term silver right now. But if we get a bit of a pullback like this here and we start to turn around, I'll probably even add to my silver. That'll be an amazing time to add to my silver there. But right now we've had a bit of a flush up. I expect a bit more upward movement, and then something like that to happen really, really quickly, and then it may pull back for a little bit. And then it's gonna get all the people out there, and then we're gonna start to see them move up. So short-term warning on gold and silver right now, but long-term, guys, I'm massively bullish. But there's so much positivity out there right now that to me has always spelled on an overall basis, on a short-term basis, a little push, but then something a week from now, or 2 weeks from now, or 2 weeks from now, something happens and we start to see a bit of a short-term pullback. Also, moving over to Market Watch, and we've got the big test arrives in the busiest week of earnings seasons. All right, so earning watch, we have Alphabet, Amazon, Apple, Facebook will all report in 24 hours one another. Now, here is the thing. Google, I'm not too sure about. I'm not too sure about that. Amazon. The one thing about Apple, if you watch one of my recent videos with Apple recently, we're seeing that their phones have actually been down. Their selling of their phones have been down compared to Samsung. Samsung is only about 10% down, and Apple has actually had a lot there. We also know that Facebook, there's been something like, I think it was something reported that $7 billion worth of funds leaving. I forget the exact number, but there's been so many advertisers leaving Facebook. So I actually see a bit of a danger territory that's happening right now, because the problem with what's happening right now with the Nasdaq and the overall big move in the Nasdaq, it's been a big bulk of these, plus Tesla, been a big bulk of these that have actually pushed up the markets through here, especially in the Nasdaq, the big 5 companies through. So if we start to get some weak earnings through all these companies, we're about to see a bit of a move down. And if we go over here to a Bloomberg article, bubble warnings get louder, with Nasdaq erasing huge amounts on that. This was actually last week. But we also can see here that this article through here, this bubble signs warning, we can see how the valuation where it is right now. Now there's two sides to look at this. Firstly, this is 1999 over here, and 1999 did what? Massive move up, and it moved down. Now here is the interesting thing. Notice how the massive move up went up, but we continue to go up for quite some time. The question is this little pullback right now we're seeing in Nasdaq right now? If we see what this is the valuations for Nasdaq, and people say it's so overvalued. If we have a look at the actual Nasdaq chart, and we can see how the Nasdaq has indeed been going up for quite some time. Right now, on a bit of a short-term basis, you can see that right now Nasdaq is actually holding strong through here. But the whole thing about this is that, yes, Nasdaq may get a little bit of a pull down, and you can see that on a short-term basis, there's a bit of actually support level through here when it comes to Nasdaq. So we may only just get a little bit of a short-term move down, and then boom, the market might continue up from here. So I would not want to be shorting the markets right now, even on a short-term basis, because this bubble can keep going on and on and on for quite some time. As we can see from this picture here, we can see that what's actually going on. We can see the bubble actually went up, but then it kept going up for a long time. It went up. So we've been going up here. Who says we can't keep going up for another 6 months or so? So just because there's this is a bit of a warning sign, that it's really hard to say whether this is going to pop or not, because if this is like 1999, then we may get a bit of a short-term pullback, but we could expect to see a lot more vertical action out of that, which is just going to spell a bit more of a bigger bubble. Now, for me personally, I'm biased. I want to see the Nasdaq keep going up. I want to see the market keep going up. Why? Because that's going to present an amazing shorting opportunity when it does bust. And I'm going to be all over that. Now, moving over to this screenshot here that we have from Ray Dalio. This is really interesting. This is actually a really good screenshot. What we're looking at right now is a few different things. Firstly, we can see here, this is the private sector non-financial debt, obviously through here. And you can see when this back here is the 1930s. So they have the timeline down the bottom here. And if we move up to the top here, we can see how this top up here, this is when the cycle changed. And we started to head down through here. And then it was around 1945 or so, maybe around 1945. That's when the New World Order started. We had a New World Order, and then we started to pick back up through there. And now we can see what's happening through here is that this is when the cycle changed. This was the 2008. This is when the cycle changed. And so if we see from basically 1937, maybe 35, that's when the cycle changed. And then I would say around about, what's that, roughly around about say 10 years, maybe been a bit longer, we started to get into a New World Order. And the interesting thing is back here, we can see how there's an analogous period to where we are right now. If we go down to the bottom here, this bottom chart here, the blue line is the interest rates of what actually happened in the past, because if we can see what's happening then, it's a very similar situation to what's happening now. What's going to happen over the next 10 years or maybe even the next 20 years. So we can see, firstly, look what happened here in 1929. We know the 1929 crash. Guess what happened? When the 1929 crashed, the interest rates, the blue line went down to zero. See how it went down through there? The interest rates went down to zero. That was very, very, very similar to when the 2008, the interest rates went down to zero in 2008, like it did in 1929. What also happened back in there in the 1929? They did what? They started to print a lot of money, and you can see how basically the monetary base, the funds, they started printing a lot more money for, what was it there? It looks like probably close to 20 years, maybe I'd say around about 15 years. As you can see, if I bring a little dotted line through there, you can see, so it's probably somewhere around about that 1945, aka when the New World Order started. So somewhere around about that level through there. And so you can see what happened. Now, when the New World Order started to kick in, guess what happened? Firstly, the interest rates started to pick back up, and we went through a massive spike in interest rates for the next, what's that there? 10, 20, 30, 40 years. We went through another big spiking. Yes, we're in a bit of a move up, a move down, move up, move down, move up, move down, move up, move down in that. But guess what was also happening? Look at all this debt back here. Debt restructuring, so on and so forth through here. Then we went down the bottom through here for quite some time. And then the same thing happened where we are right now. We can see that we're going through a bit of a change through here. So what's likely to happen moving forward? Well, the exact same thing. I don't know exactly when that's going to be, but we're going to get what? We're going to see this debt, how it just exploded, and the printing of money. We're going to see that happening just like it did back through here. This is the New World Order. And so we can see, firstly, the debt restructuring. Now, what does it actually mean on a to you basis? Firstly, pensions, government assisted. These pensions are going to be threatened. Healthcare is going to be threatened. Even things like doctors, teachers, those different government jobs over the next 10, 20 years are going to be hit hard. And also we're going to devalue the dollar and so on and so forth because of the printing of money. Now, also what is also going to happen as well too, over the next 10, 20 years, we're going to start to see this again, which is what? The interest rates start to pick up as well too. So that's the reason why a lot of smart investors right now are starting to buy as much property as they can as possible right now, because they know 10 years, 20 years from now, they won't be able to buy property. The hard thing about buying property this day and age is that even though it's low interest rates, we're getting a very, very, very constriction on the actual banks itself, because the whole forbearance thing and so on and so forth. Then they're not lending money out, but they're not lending a lot of money out. But there's also a restriction there. So if you can buy a property right now on that low percent interest rate, especially if it's cash flow right now, oh my goodness! Because as time goes on, what's likely to happen with the property market is that the rents are probably likely to increase up as well too. And if you can start to get down here on a very, very low percent interest rates, it's going to push those property prices up as well too. So there we go, guys. This is a bit of this is probably, you know, the whole reason for the title of the video, the coming devastation, is this is the coming devastation here that most people won't see. Now that's the reason why overall long term I am massively bullish on the metals, even silver, even like the gold mining stocks. I think there's actually massive upside potential even over the next couple of years when we start to see this. But that's not forever, guys. All right, that's not forever. What I mean by that is that I think over the next couple of years we're going to see those big booming markets, big bull markets out of the mining stocks, GDXJ, those sort of things. I see silver being a very big bull run. Gold has already made a massive move, so you know gold has already made, it's what we call the easy money. Silver, GDX and GDXJ, those different indices are just getting started on what I believe, and it's just going to keep going on. So this is the devastation here, guys. I hope you enjoyed this little session here. And moving on for what I was just saying there is Ray Dalio warns that the US-China capital war that would hit the dollar here. He says here, billion investor Ray Dalio said conflict between the US and the China could expand into a capital war that he suggests would actually harm the US dollar. So this whole printing of money, and now the whole different war what's happening right now between China, the rising power, and then also what's happening right now with the printing of money, that's what's devaluing the currency. And like I just showed you a minute ago with that screenshot, it's going to come a time where they're going to start to default, and you know, if it's going to get a lot worse. And also we can actually see that we're getting an article here from Zero Hedge. It says massive short squeeze sends crypto surging because Bitcoin above 10,000. And we can see that what's happening through here. Let's actually, all right, so we're looking at the Bitcoin daily chart, and let's go have a look at the weekly chart. Let me share with you what I see is happening right now with Bitcoin. Firstly, on a technical basis, I see Bitcoin, we've had a strong move down, a very strong move up, and we haven't been doing much for quite a bit of time through there. So I see that if we start to get a very strong solid close above, say, 10,400, this little low, higher low, breaking past previous highs, this should send us up to a very nice movement to the upside. If I look at any sort of resistance points back in the past, I can see that this level all through here is definitely indeed a resistance level. So if I go back to my daily charts, then I see if it starts to break these levels through here on a strong basis, I see at least a nice rise back up to at least the 12,000 level, maybe a bit higher before it starts to sort of, you know, get into a little bit of resistance here. But looking at the overall weekly chart, we could start to see a very nice move back up with the overall Bitcoin, what's happening through there. So there you go, guys. I hope you enjoyed today's video. Make sure you hit the like button, hit the subscribe button. Let me know what you think about this here. And let me know what you think about, you know, about silver and gold as well too. Do you own silver and gold? Do you not own silver and gold? And also let me know what you think about the Nasdaq. Do you think the Nasdaq right now is going to just bust right now, and we're going to see a drop and that's it, and this is the top? Or do you see that the bubble is likely to continue? Let me know in the section below. And also, guys, on the screen, what you're seeing right now, click on one of those videos and to go watch some more training from me. Speak to you soon, guys.